Hey, what's up everybody? It is Friday, May 7th. So we got our jobs number today and it was bad, but it was kind of in line with the forecast. 20 million jobs lost in the month of April. 20 million jobs, that's the worst ever in history. Unemployment rate up to 14.7%. That's not the worst, actually. It's not as bad as what we saw in the Great Depression, but there's no way to paint this. I mean, the number itself and the reality of the job loss, it's dismal, it's terrible, it's apocalyptic. But the market was up almost 500 points today. It makes me kind of laugh because, not to necessarily make fun of anybody, but it must really frustrate those who are short the market. And we've seen a lot of big names recently come out saying the market's going to crash, we're going to make new lows. I made a video about Jeffrey Gundlach not too long ago, who was very, very bearish. Folks, this is what I'm talking about. It is, right here is a perfect example of something that I spoke about a few weeks back, how the market acts as a discounting mechanism. The market usually reflects forecasts, it reflects investor expectations. When we had that big crash in March and April, when the market dropped, that was in many ways you could measure that as the worst crash ever, even going back to the Great Depression, 1929 to 1933, and not only the magnitude of it, but the rapidity of it, how quickly it occurred. That was already reflecting or telling us that there was an expectation for a major contraction in the economy, a surge in unemployment. I was talking about this. I said this. And then I said what is important is to see if there are any new variables in this scenario. You know, everybody saw what was happening in terms of the virus, in terms of the shutdown of businesses across the country, indeed throughout the whole entire world. The market crashed. Were there new variables? That's what I spoke about when it was happening. Were there new variables? And I said, yes, there were new variables. Unprecedented amount of fiscal support. I mean, I talk about that every single day. These videos that I do every single day, I literally quote the numbers to you. Want to hear the number today? Okay, we're up 731 billion over where we were, where government spending was at this time last year. And again, last year was a record year. We're going to easily have a record. The deficit now, as of yesterday, was 1.53 trillion. That's an all-time high on a nominal basis. It's not an all-time high as a percentage of GDP, and it's about anywhere from 7 to 10% of GDP, depending on where GDP comes in for the second quarter. So you've had a massive amount of fiscal response, unemployment benefits up to 87 billion. This was the new variable that was injected into the situation. We also have, or you know, it's under discussion now, a number of new spending bills. This would be the 5th round of stimulus still yet to come. So this is ongoing. And the mistake that many people made or are making is that they look at these figures like today's 20 million job loss. They say things are terrible, so the market has to go down. The market is already looking ahead. It's based on expectations, it's based on forecasts, it's based on anticipated developments or new developments that will create the basic conditions that will define how the economy looks. This is the core of my analysis. This is MMT. I mean, MMT is exploding. The discussion about MMT, the talk of MMT as policy, implementing as policy. As a matter of fact, the new stimulus that they're talking about is going to include, or is said to include, $2,000 a month to everybody who under 120,000 a year in earnings. So there's still a lot to come. That was the new variable in the equation. So if you want to, and by the way, throughout all of this, and I've been saying this is another thing I've been saying on a daily basis, sentiment was negative, way too negative. Maybe right now, in certain measures, we are starting to see a little bit of a shift towards a more positive outlook. But I'll tell you this, by the time this rally is over, and yesterday I mentioned the fact that the NASDAQ has erased all of its losses for this year so far. It's a leading indicator. The S&P will probably do the same thing when all is said and done. The Dow will probably do the same thing when all is said and done. By the time this thing tops out, you will see a complete turnaround in investor sentiment. Everybody will be talking about how things are getting better, how the virus has been contained. You know, you can write the narrative right now. I absolutely can guarantee that you can write the narrative right now. Just like what we saw, remember, all of 2019, there were many concerns, but I mean you had the headline concerns about the trade war. You had concerns about Fed conducting these extraordinary monetary measures. You had concerns about the inverted yield curve. I mean, month after month after, and I kept telling you, you got to stay long this market. Fiscal support is historic at that point. It's way bigger now. And what happened? In January, by the way, I already started to tell you at the end of 2019 that the fiscal support was starting to slow down. In January, what happened? China and the US signed the trade deal. Every headline was blaring, you got to get into the stock market. I remember one analyst saying, now is the absolute worst possible moment to sell stocks. I was telling all my subscribers at that time to raise cash, or even take a short position on the market. The sentiment had flipped 180 degrees from highly negative to highly positive. And the other thing I was highlighting all last year was there was a very high level of neutrals. Those were people who were uncommitted on the market. And every time the market went higher and higher and higher, the neutrals sat on the fence. They sat on the fence, they sat on the fence, they sat on the fence, and then guess what happened in January? What do you think they did? They threw in the towel. We can't take it anymore. We're jumping in. We're buying this market. And voila, you have the outcome. We had the top in February. So it was a few weeks later. It was a month later. Folks, the sentiment's going to shift around. We may reach a point later on this year. I don't know. I mean, you know, there's no sense to speculate. You wait and you see what the policy is, and then you are able to strategize from whatever the new policy is. Maybe they'll say, oh, no, the deficit is too big. We got to start cutting spending. Maybe it's going to be the election. All right? Maybe something will happen in the election. Maybe Trump will lose, and investors will look at that not just as a negative, but maybe Biden proposes different policies that will undercut economic support. We will know. The point is we will know. But right now, conditions are positive. You know, it's weird to say this because I know a lot of you maybe will get upset because some of you could be suffering from current conditions, and I understand that and I empathize with that, believe me. But we're talking about the market, we're talking about investing, and right now conditions are positive and they will remain positive until they change. And we'll let you know. Anyway, my subscribers will certainly know. And if you want to become a subscriber, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. You can find the link right here in the description below. You have to use the concepts and understandings of, and nobody else is doing it. Remember, I haven't said this in a long time, but I am the only, there are a lot of MMT academics out there. There's a lot of discussion about MMT, MMT, and I've been involved in this for almost 20 years. It is finally, filtering up into the policy level, and I'm very happy to see that. People are talking about it. There's still a lot of the mainstream academics and economists who are denigrating it and saying negative things. To hell with them. They don't know what they're talking about. They're living in their mythology. But I am the only one who has developed an applied approach to MMT. I take the concepts and understandings of MMT and we use them to invest and trade in the markets. You are not going to have better insight. You're not going to have better understanding. You're not going to have better knowledge unless you come over to me. So go pitbulleconomics.com, sign up for a 30-day free trial of MMT Trader. Have a great weekend. Stay safe. Bye-bye.